Why did Netflix just walk away from buying Warner Brothers, and what does it actually mean now that founder Reed Hastings is stepping down?
Well, it basically means they refuse to inherit billions in dying cable TV debt,
hmm
and they are fully pivoting back to their roots as a ruthless tech company.
Welcome, and thank you so much for watching. Today we're taking a close look at the massive strategic pivot hidden inside Netflix's Q1 2026 earnings. And let's just jump straight into the raw numbers. Revenue hit $12.3 billion, beating expectations, but Wall Street wasn't entirely thrilled.
Right, because they missed the earnings per share mark. It came in at 70 cents, and that caused the stock to drop like nearly 10%. But the company really didn't flinch.
No, not at all. I mean, they are still projecting up to 14% growth and aiming for $3 billion in ad revenue. But the big elephant in the room is the Warner Brothers deal falling apart. Like, buying Warner Brothers feels like a Tesla buying a chain of gas stations.
That is a perfect way to put it. It might bring in cash today, sure, but it completely dilutes their identity as a tech disruptor.
Yeah, they'd be inheriting a crumbling foundation.
Exactly. Netflix looked at Warner Brothers and realized, we would be buying an anchor tied to a dying medium. They exercised some incredible M&A discipline here.
Putting ego aside.
Right. Management saw that the sheer cost of integrating legacy linear TV networks just destroyed the net value for shareholders. They walked away because their core focus is building the future of production themselves, not buying the past.
Which totally explains why, instead of buying Warner Brothers' massive library of past hits, they quietly acquired a generative AI company called Interpositive.
Yes, that was a huge move.
And wait, Interpositive is a proprietary generative AI built specifically for filmmakers. So are we realistically just a few years away from Netflix using this to spit out entire binge-worthy seasons without a single human writer or director?
Well, if you look closely at the strategy they laid out in the earnings call, absolutely not. They know it takes a great artist to make great art. Interpositive isn't a replacement engine.
So what is it then? Just a tool?
It is an acceleration engine. They are literally using it on set right now for pre-visualization. They use it to set up visual effects sequences and manage complex on-set safety protocols.
Wow, so it's very hands-on for the actual crew.
Exactly. And furthermore, they are feeding this AI into their rapidly expanding ad tech stack. It allows them to quickly generate custom, highly targeted commercial formats.
Which helps them hit that $3 billion advertising goal we talked about.
You got it.
Real quick, before we get into how this strategy directly impacts what actually shows up in your living room, if you're enjoying this breakdown, make sure to like and subscribe so you don't miss our next video. Okay, so let's talk about what actually gets you to hit play.
Right, the content driving real engagement.
Exactly. So the World Baseball Classic in Japan just pulled in 31.4 million viewers. That makes it the biggest global baseball streaming event ever. I mean, it drove Japan's largest single sign-up day.
Which is just staggering. And when you combine that with their new ad-free kids gaming app, Netflix Playground, you can see their programming strategy looks completely different now.
Yeah, it's really not just sitcoms and movies anymore.
No, and this is where we have to redefine how streaming success is measured today. Netflix is shifting their focus to a member quality metric.
Member quality metric. What does that mean exactly?
Well, think about it like this. A live, highly targeted event like a global baseball game or an interactive kids game might generate fewer total viewing hours than your standard 10-episode sitcom.
Okay, sure, because it's just one event.
Exactly.
Yeah.
But when you open Netflix to watch that specific live game, you prove you're willing to sign up and, more importantly, stay subscribed specifically for that unique event. It combats subscriber churn.
Oh, I see. So it drives fundamentally higher acquisition than just throwing generic background noise at the wall and hoping something sticks.
You hit the nail on the head. And all these massive shifts, the AI tools, the live global sports, the interactive gaming, they're all happening right as Reed Hastings walks out the door.
Yeah, Hastings is not standing for re-election to the board, which is the end of an era. He leaves behind this massive legacy of risk-taking.
I mean, he transitioned them from shipping plastic DVDs in the mail to defining global streaming entertainment.
Right, which was an insane gamble at the time.
And now, handing over a company that essentially dictates global culture, the new leadership is proving they're willing to double down on those risks to find the next iteration of growth.
Which really leaves you with a final thought to ponder here. As Netflix aggressively integrates live global sports, tiered advertising, and gaming, Are they destined to become the very thing they originally disrupted, like a traditional cable network?
Or, are they building an entirely new entertainment medium we don't even have a name for yet?
Exactly. Thank you so much for watching. Remember to share and subscribe, and we will see you next time.